All right, welcome to the webinar. Today we're going to cover the topic on how to use stock scanners, and specifically the all-in-one Guru scanner here at GuruFocus.com. Now, most of you are probably familiar with stock screeners. If you are not, this will be a good entry-level explanation of those and kind of a walkthrough of how to use them. So in order to access the all-in-one screener on the GuruFocus website, what you're going to do is go up to the top of the screen here at the horizontal menu bar, and one of these headings, the first one over from home, is screeners and tools, and then below that our first option is going to be the all-in-one screener right here. Now, this is an extremely powerful stock screener. Now, what stock screeners do is go through a set of either fundamental or technical indicators or data that you are looking for and comprise for you a list of stocks meeting that criteria. So for instance, if you wanted to find stocks with a PE ratio less than 20 and you selected PE max 20, it's going to show you all the publicly traded US stocks or international stocks, if you so choose, meeting that criteria. And the more boxes you check and the more criteria you want to see met, the smaller that list of stocks is going to get. So the goal is you want to have enough specified criterion to bring it down to only the types of stocks you're looking for, but not so many things that you're down to one or two stocks and it's not really doing the job. Okay, there's never, well, I shouldn't say never, but there's very rarely the perfect stock that checks every single box you're looking for. So what we're trying to find is the best stocks available for us today. So here's what it looks like, the all-in-one screener. As you can see, there's a lot to check here. A couple of things. One, across the top of this, you're going to notice several little tabs here. At each one of these tabs, fundamental, valuation ratio, profitability, etc., has its own set of criterion you can select. So it's a very, very in-depth, capable scanner. Now, we are on the fundamental tab, which is the first one here. It shows by default. And as you would guess, most of the criterion here are fundamental data. So revenue levels, return on assets, return on equity, return on capital, things of that nature. Now, what you can do is switch between these different tabs at the top to find the criterion you're looking for. So if you're more of a value-based investor and you want stocks that are trading at a low earnings multiple or low price to book, price to sales, that kind of thing, it's going to be here in the valuation ratio tab. And you see these drop-down menus. The one on the left is going to be the minimum, and the one on the right is going to be the maximum. Now you can set a range, you can set just a max or just a minimum, whatever you wish. The profitability tab is basically focusing on margins. The growth tab is looking at the growth rates of its revenue, its EBITDA, its earnings per share, book value, etc. And you can even search by gurus. So in other words, you can look through any fund manager or hedge fund manager in this list and find stocks that they have recently bought and sold, stocks they're currently holding. You can check multiple ones to see, find stocks that, Icon and Buffett and several other guys you follow are all holding. And you can do a number of other things. In addition, you can search for insider activity. So an insider is defined as any executive within the company or an investor owning 5% or more of shares. So essentially, this is the CEO, the CFO, an activist investor, that kind of thing. So if you want to find stocks that CEOs have bought, at least X dollar of shares in the last 14 days, 3 months, 9 months, 12 months, etc., you can search for that. So it's another nice way to search for stocks. But let's start with something basic, okay? So let's look at like some old Benjamin Graham, very, very basic formulas back in his day. So what would he say? Well, he's looking at primarily U.S. stocks, okay? So up here in the country section at the top, if you can see that right across the top of the screen, you see there's different countries you can check. Now, if you are a basic GuruFocus member, you may only have access to US. If you do the international data packages, there are other regions you can search as well. It just depends on how big your investment circle is. But we'll focus on the US for now. And inside of country, we're just going to select USA right here. And notice at the bottom, it already began populating our list. Okay, so now just U.S. stocks, we see that we're looking at 5,518 publicly traded companies here. Okay, so keep an eye on that number, and you'll see if you get once you whittle it down to a workable list. Now, Ben Graham, he liked to buy stocks that were trading at less than 15 times earnings, right? So it's going to be a valuation. That's price to earnings right here. So we're not going to put a minimum, but we are going to put a maximum of 15 times earnings. Okay, PE, and in parentheses it says TTM. That stands for trailing 12 months. So now notice we're down to 3,277 stocks. If you see that number right there above the records and below our scanner. So still a pretty large number, right? Not helping us out a lot, so we're going to look for some more. You also like price to book value to be less than, say, 1.5. So once again, we're not going to put a minimum in. We are going to do a maximum of 1.5 times book value. And notice that list shrank again. Now we're down to 1,084 stocks. So you see the more filters you apply, the shorter your list becomes because the fewer the companies there are that are meeting both those criteria. So we're still down to 1,000 stocks. We want to look at more. So let's find some. Let's look at their profitability, right? Or we can look at their growth. Let's look at their growth. So let's say we want a company that's growing at a faster rate than the market or faster than GDP. So let's just look at their revenue growth. So the last 5 years, let's say we want to find companies that are growing at least 10% a year. Okay, that's a pretty solid revenue growth rate. And notice it chopped our list by almost 90% down to 135. And if we want really long companies, let's look at their 10-year growth rate as well. So let's find that they're growing, let's say at least 8% for the last 10 years. And now we're down to 65 stocks. Now, if you're a dividend investor, you can go right across the top once again over to the dividends tab to search those criteria. We can apply one of those just for fun. So let's say we are looking at, we want long-term stocks. Let's say we're looking for some that have been increasing their dividend, let's say for 5 years. And now we are down to 9 stocks. So what do we have? We have Assurant, we have Brightburn Energy, Corning, Legacy Reserves, National Oil Well, Vargo, and a handful of others. That may be a little bit slim for you, okay? So anytime you can just uncheck that box and go back. Now you can look for stocks in a certain price range. You can look for stocks that have had big movement today, big volume stocks, big movements over the last year or week. If you want to find quality stocks and find ones that maybe have had a pullback recently, we can look for a price change. And let's say year to date, want to be down at least 10%. So these are stocks that are down on the year but have really strong fundamentals. And you see we've chopped our list down to 21 stocks. This is about the kind of size I personally would like to look for. I'm generally looking for a list of anywhere from 10 to 30 companies that I can kind of dig in. If you got 70 or 80 stocks and you're trying to investigate each one of them and dig through the financials, it's going to be a lot of work. And if you have only 4 or 5, you tend to sometimes put a lot of weight on those. Think these are the perfect 4 stocks. I'm going to build a portfolio out of these. So, a couple things to remember. One is an extremely powerful tool. This scanner is absolutely amazing, but it's still a scanner. It's still a computer. It's still working off of algorithms and numbers generated from financial reports. So there are still going to be some mistakes. And by mistakes, I don't mean the software makes mistakes, but a company had, let's say, really high earnings one year, and it looks like they're growing at an alarming rate, but in actuality, you look back and they sold off half the company and it generated a huge profit, or something to that effect. So you still want to kind of dig into each of these companies. But that's kind of how you use it. Again, you could spend hours going through here, trying out these different check boxes, trying out the different criteria you could apply to those stocks. And the more I would say the more sophisticated of an investor you become, the more of these you'll begin to experiment with, right? I mean, when you're just beginning, let's say you're kind of a novice investor. And I don't mean that as an insult, but you haven't been behind the screen for 20 years or so. Maybe you're just looking for companies that are growing their earnings, or companies paying a decent dividend, or some that aren't trading at ridiculous valuations. You more advanced investors out there, you may be looking at return on tangible assets. You may be looking at their account payable and their turnover ratios of profits, their gross margins, share buyback rates in order to compress those earnings. There's a lot of different things you can scan through here. Now, another nice feature we've got, well, let me show you this first. So when you begin using these screens, and let's say you have one you like, right? For instance, this one we've got U.S. stocks trading at less than 15 times earnings, less than 1.5 times book. They've been growing pretty consistently over the last 5 to 10 years, and they've recently pulled back at least 10% year to date, and you want to save this, okay? Because at any time there's new fundamental data coming out. These companies report once a quarter. The data will change. You can save these screens you create to come back to. Okay, so a lot of times people will make, let's say, a growth stock screen, or a deep discount value stock screen, or stocks trading below cash, stocks Buffett's buying, or heavy insider buys, etc. You can save these and they'll show up over here in your user-defined screens list. So here's how you do it. It's very simple. Right in the middle between the list of stocks and the scanner fundamental, it says Save Current Screen, and it has name, any notes you want to put, and save. All right, so all we need to do is make up a name. We'll just make it Test Screener. We don't need to put any notes. You can, and just click Save. And notice up here in the top right, that user-defined screens area, right up here, just flashed when we did that. And also, when I hit this drop-down menu, you'll see it in there. Okay, so now it is one of our user-defined screens, and it will remain there for the life of your account. So at any time, you can go to the screener, click this, and it will rerun those criteria to populate you a new list. And anytime you want to delete them, just click on the Manage Screens button right here. You can decide if you want to get email alerts when things populate, or you can just delete these screens from your user-defined list. So that's a really nice feature. A lot of people don't know it, but definitely want to save your work so you can come back to it. So another nice feature, we have some screens built in here for you that are based on the work of the best investors over the last 100 years probably. Okay, and that's all right up here at the top, just to the left of that user-defined screens we were looking at. There's an area called GuruFocus screens, and these are created by Charlie Tian here, the owner of GuruFocus and programmer. And you see this list. We may add more over time. But these are already in here. So this is the Benjamin Graham Lost Formula, which came from an article he gave on a later point in his life, based on his very simplistic stock formula he used. Canadian fast growers, CEO buys, for instance. This is going to show you stocks that are being bought by CEOs. And any one of these screeners you go to, you can see what criterion are being applied to it. Okay, so we just went to the dividend growth screen. Okay, and when you look across the top of these little tabs right here that we looked at on top of the screener, you'll see a little number. See that 3 right there on the dividends one? You'll see a little number in red if there are criteria inside that tab that is working on. Okay, so you could see it in multiple ones of these tabs. We just have it on dividends right now. So when we click on the dividends tab, here we see the 3 criteria that are being provided. So it has a dividend yield of at least 3%. It's growing its dividend at least 10%. And it has a payout ratio less than 60%. So a payout ratio, that means that the company is using less than 60% of its profits to pay that dividend. And why is that important? Well, if it takes 90% of their profits to pay that dividend, it's at risk if they have a bad year, versus they're using 10% of their profits, they're much more likely to continue to pay that. And you can change any of these if you want, and it will update the list as well. Okay, there's a handful of others. Hedge Fund Guru Top 10 aggregated. And once again, we see a 2 highlight here on the Gurus tab, so we'll go see what we're looking at. And the boxes checked are their current holdings and involved in buy-sell activities for obviously the top fund managers we see from the value standpoint: Bill Ackman, Carl Icahn, David Tepper, David Einhorn, George Soros, and a handful of others here. Okay, so these are real legends of today, and you can go through this list. The nice thing is this one puts up 143 stocks, right? If you want to filter this down further, you can. You can continue to go through these tabs and say, all right, I want to find the ones that these guys like, but they're trading at a PE of, let's say, less than 20. That struck me down to 72, and say, okay, well, I want growers, or any of the stocks this filter found growing, at least, let's say, 15% for the last 5 years, and 16 of them are Apple, Activist, Amazon, AutoNation, and a handful of others. So these are all really strong stocks. When you look at this list, the nice thing about using the Guru screens is you're going to see a lot of companies you've heard of, right? These guys have to purchase, for the most part, pretty large cap stocks. They can't nickel and dime around with $50 million market cap companies because they're managing $50 billion, and it's just not possible for them to move in and out of. So you've got Apple, Amazon, Chesapeake Energy, Comcast, Halliburton. These are big, heavy hitter, blue chip names you're familiar with that are kind of populating this list. Now, I've got a couple of questions here. Let me answer those before we continue. Is there any chance we'll be able to go back in time and run a screen as of a past date so that we can compare performance? I don't believe that is possible.
Well, you can download it. You can save the results export into a portfolio.
Right. So yeah, what you're going to want to do, Rod, I know what you're saying, and you're essentially looking at market testing screens to go back, kind of back testing stuff. There's really not a lot of back testing information here. What you can do, you can save these screens and put them into a portfolio, put those stocks into a portfolio and track them. If you see down here at the bottom of the page, there is an option to add to my portfolio. You can create a portfolio for that screen, a digital one, and track that. But there is not a way to really go back and track the performance of, what this screen would have produced 10 years ago, if that's what you're asking. Another question I got is, for criteria that are not in the all-in-one screener, can we create a custom tab to download more of the data points? I don't believe you can at this time, no.
Screen the price in each of their own currency.
Okay, Dr. Adam asked a question about saying that what we see here is in US dollars. If he runs a screen on European stocks, for example, would it still be in dollars? The answer is no. It will default to the local currency. It will show you Brit pounds or Canadian dollars or whatever that local currency is there. So it does automatically do that. Now, Eric, you can take out all this data. So all this stuff it runs, at any time you can export this data if you are good with Excel. So you can always download the full data here, or right over here at the far right side of the screen, you'll see an option that says download with an XLS or a Excel icon next to it. You can always get that and pull all that data to manipulate as you see fit. Okay, so yeah, Eric, that's probably going to be your best bet there. And David, yes, there will be a replay of this available for future use on the GuruFocus YouTube channel. Okay, so let's go ahead and continue. We've covered the kind of built-in GuruFocus screens here. And there are also some articles when you first come to the all-in-one screener, and I'll go back to start over. Right below this initial screen, there are a few articles right here showing you about some of these screens. Okay, so if you're kind of new to it or looking for fresh ideas on how to filter for stocks, these can be a good way to do it. For instance, Walter Schloss was one of he's a guy that worked with Buffett maybe 50 years ago, and he went on and ran a small shop by himself that has a phenomenal 50-year track record. And he was famous for just looking for what he called, quote, cheap stocks. And so based on um, an interview article, an article of an interview with him, um, this is his criterion for scanning for stocks. We kind of go through this line by line to show you what he looked for. Now again, I mean, he was doing this in the 50s and 60s. They didn't have this technology. He was having to go through manually all these companies' paper filings to find these stocks. And we're able to do essentially what took him a month of work in about 30 seconds. Okay, so, but it is showing you all the criterion of this, and when you are back on the screener, you'll notice it in the GuruFocus screens, the Walter Schloss screen. But if you want to understand more about it, that's kind of where that article would come into play. Now, for premium members, obviously you can search for other countries as well. So you can do just European stocks, you can do U.S. and European, you can do all these different regions. That's going to be completely up to you again, and kind of what your wheelhouse is. There's also another tutorial video down here at the bottom of the screen. A couple of other things you can do with this. On the Guru side, you can select between which type of gurus you want to see. So in other words, you can create your own list of guys you like to follow. For instance, if you like Buffett and you like, a handful of others, you only want to watch them, you can definitely default to those guys and maintain a list of what they're holding, what they're buying, what they're selling. You can do global gurus, which are asset managers that invest either overseas and domestically or just overseas. You can specify just hedge funds. You can specify just mutual funds. There's a lot of tinkering you can do with these settings in order to find exactly what you are looking for. Now, also when we talk about screeners, I want to show you a couple of, we call them GuruFocus strategies, but these are the kind of tried and tested screens we've been running and maintaining since the inception of this website. I'm going back to the home page now. When you scroll down just a little bit, you will see this GuruFocus strategies graph, and you can see where it's kind of, this one's outperformed the S&P by a little bit here. You see the others, and right here's the bottom that says compare all strategies. Okay, you can either go that route or find it in the screeners drop down. There's a couple of ways to access information I'm going to show you, but when we go to that, it's going to give us a very generalized overview of four of the big ones, right? The Buffett Munger screener, the top 25 undervalued predictable companies, top 25 historical low price to sales, and top 25 historically low price to book ratio companies. And you see annually each year, each of these years we have a full year of data on that performance. And on the left side, you see what the S&P has done. So you can kind of see a comparison to how well it has either outperformed or underperformed the market each individual year since inception, what the performance has been, and what the outperformance or underperformance of the S&P has been. And right here, we're kind of seeing that several of these are, I mean, most of them are beating the market by a pretty good margin. The Buffett Munger screener still ahead by about 7.5%, but not just slaughtering the market like some of the others are. So you can click on these headings here, and it will take you to that list of stocks. You can also click below where it says screener here, and it will take you to the exact same place. Now, once you are here, you can again filter this down to an even smaller list should you so choose. Okay, and here we have 41 stocks, but you can select other countries that you see. This is the US. If you want to see what's showing up for the UK, what's showing up for Europe, Asia, Latin America, etc., you can. You can choose certain sectors. If you're looking for, a good tech stock or a good transport stock meeting these criteria, you can search by sector, their predictability ranking, a few other criteria you can use to really drill down that list. And below, there are some more screeners as well. Now, these are the big four we kind of highlight up here at the top, but there are more. This is a Graham net screener. What that looks for is stocks trading below net working capital. It's how he made a phenomenal living for several decades, but of course that was before the technology and the trading algorithms and the hedge funds and the arbitrage players. So those types of stocks are less common today, but when you find one, it tends to be close to a sure thing when you get like a net type company. We've got undervalued companies. We've got the all-in-one screener we looked at. The low price to sales stocks, low price to book, stocks trading at 52-week lows, companies with high predictability ranks. The predictability rank, if you have not seen, is what these stars are. And what it looks to do is see how consistent the company's revenues and earnings are. So again, everything on this website is very clickable. There's lots of definitions. We scroll down where it says, well, what is predictability rank? And we get a very in-depth article. And if you haven't read this, I encourage you to sometime in the future. It is written by Charlie Tian, owner of GuruFocus, and it's a phenomenal piece of research. And it goes into what worked for the decade of 98 to 08. And this was written in 08, so it's not looking back saying this is a nice piece of time. And this was written, as you can see, September 30th, 2008. And it talks about and demonstrates the extreme outperformance of these more stable, predictable, consistent companies versus their counterparts. So really nice read. I'd encourage you to take a look at that if you are so inclined. But it'll really explain your predictability ranking and I think make you value it more. So a couple of other things you can do. Let's go back to the all-in-one screener. Let's look at one of just the GuruFocus screens. So for instance, we'll look at the Peter Lynch screen. Now, the Peter Lynch screen is pretty straightforward. We see you have two on the fundamental here. So as far as industry, Peter Lynch did not like technology stocks. So when we scroll down here through the industries, you'll see tech unchecked, if I'm not mistaken. And on the predictability side, we're looking for stocks that are at least have a 2-star predictability. On the valuation ratio, we want a reasonable earnings multiple, which is going to mean here it's selected at 14 or below. And then a grower, we want a stock that's been growing at least 6% for the last 10 years. And here's our list of 39 stocks meeting that criteria. Now you'll notice as you run these, what shows up as far as how these companies are depicted, the data points, the fundamental pieces that are listed here. For instance, this one shows price, market cap, industry, predictability, etc., are different from time to time, and that's because it defaults to the view that most relates to the screen you just ran. Okay, but you can switch between these at any time. So just as, I know this is a lot of information, but just across the top, as we had the different headings to find different criteria in the screener, we have similar headings down here in the results area that allow you to view different fundamental pieces of data with that. It's not going to change this list, but this total of 39 stocks that is listed here, right now you see it's on active filters, so it's showing you the things you filtered for. But if you want to see it kind of from a profitability view, it's showing you the margins. If you want to see it from a valuation view, it's showing you price to book, price to earnings, price to sales, discount cash flows. If you want to look at it from a growth side, we can look at all the EBITDA growth rates, the rev growth rates, the earnings per share. Now, why is this important? Well, if you're looking at 10 or 12 stocks, it may not be. All right, but if you've got a list of, say, 200 stocks and you want to drill it down further without using any more of these check boxes, you can click on any of these headings here to have it filtered from lowest to largest or largest to lowest of that. Okay, so we've got a list of 39 stocks. Well, show me the ones that revenue's been growing the fastest for the last 5 years. So we hover over 5 years here, click that once, and notice it's escalating, going from 1 to 3 to 4 to 5. If you could see that. And what I'm clicking, if your screen's too small, it's right here. I just chose one of these at random. Okay. Now, if we click it again, it's going to be in descending orders. We're starting at the ones that have the highest growth rates in terms of revenue for the last 5 years. So starts with CAP, CBI, Herbalife, MTZ, and it goes in descending order. So it's a nice kind of way. Once again, you can just view these in different formats. There's also a Peter Lynch charts view that it may not show up here because it's so data intensive and I'm broadcasting this, but it'll actually depict the Peter Lynch chart of each of these stocks. And here it is populating. So instead of seeing it just in boring list format, you're going to see again the blue is what's known as a Peter Lynch earnings line, okay, and that's just a hypothetical price for the stock at 15 times earnings. And the green is just the price of that stock. And these go back pretty far, depending on how much data there is for that stock. So for Acme, it goes back to the 90s. For Anderson's, back to 2000. But you can quickly identify, if you're looking for reasonably priced stocks, stocks where the green line of the price is below that earnings line, and stocks where it is in excess of and possibly overvalued. Now, Rod's got a question here. He's asking if we could go into the all-in-one screen like the Buffett Munger screen to show the precise parameters. Excuse me. Rod, that is the only thing that is not open, and I apologize for that. There's very little on this site that is kind of protected and proprietary. Those 4 big screeners that we looked at just happened to be that. And it's a formula Charlie's worked on for a lot of time. He shares all the stocks. You can run it at any time you want. That's the model portfolios here. It just doesn't show the exact criterion of that, and some of it is just hard coded into that. So I apologize, but that is, it is a business, and that is a proprietary screen. But again, we try to show you everything we can out there. This is just one kind of thing that is held close to the vest here. Yeah, David asked if I can point out that article referencing stocks to go into the decade. If you go to, let's see, how do we find that? Well, let's just, you can really do it from anywhere. I just search predictable, but any stock you go to, David, to find that article that has these predictability stars, any stock. I mean, I think you can even plug in an Amazon or something and see it. When you hover over these stars at the top next to a sticker symbol, one of the things that's going to pop up is it says what is predictability rank, and that's what's going to take you to that article. So if we hover over this, right there at the top, what is predictability rank? And if you click that, it's going to take you to this article. Now you can do a search. You can go in here and search what worked in the market from 98 to 08 and probably find it that way. You can dig through. That's the easiest way to get to it. And again, I would really encourage you. It's a 3-part article with lots of really in-depth research. And here's a nice visual what that predictability rank looks like. So at the top is Walgreens, which is a very, very predictable stock that follows a very smooth pattern. And down here is like USG Corp. It gets very unpredictable and is less consistent. So great article. I encourage you to read that. Now, this is a lot of information I'm giving you, okay? If at any time this is daunting to you, if you go to the screener and think, holy crap, I don't know what half these things mean, that is okay because they're all clickable. All right, so just take one off the top. Let's say return on tangible equity, right? Some novice investors are not going to fully understand what that means. Notice it's blue and it's hyperlinked, so just click on that and a pop-up comes up that explains what that is. It shows the calculation and gives kind of a layman's definition of why that is used. And you can do this for any of these. Profitability, again, shows you what that is. Return on capital, that is a Joel Greenblatt specific metric that he used, and it gives you his full formula, why he liked it, where it came from, his book, The Little Book That Still Beats the Market. So again, everything is very clickable, very searchable. The search bar in the top left of the screen, anything you are looking for on this site, I encourage you to try it. It's not just for finding stocks. You can start typing pretty much anything and it will search articles, it will search the site content, it'll search features of the site. Use that anytime you get hung up and you can probably find what you're looking for. And Doran's asking about the webinar. Yes, Doran, if you go to You'll get a follow-up email from this webinar that has a link to the YouTube channel, but if you go to YouTube and just search GuruFocus, you'll probably find our channel, and all these webinars are contained on there. Here's an article done in 2012 about the new screeners. It's going to kind of go through the details of new additions made to the stock screener. The stock screener has really been a developing product over the life of this company. It has become more and more and more in-depth and more powerful. So I can't promise you that there will likely be more features and more benefits if you fast forward several years, but this is a very, very complete tool. Now, I got a question in the beginning of this webinar I wanted to go back and address, and Jeffrey, if you're still on, he said, just recently Zacks, the company, Z-A-C-K-S, offered a software one can pick the best sectors and also the best companies with that sector. Hope you'll teach us that as well. So, Jeffrey, I wanted to address your question. Two things come to mind. One, when you say the best sectors and the best companies, what do you mean by that, or what do they mean by that's a better question? Because if they're saying the best is the ones that are, quote, going up, or that would be ones that have had the greatest price advances, that's not necessarily telling you what's going to do best in the future, right? Everyone, people that don't understand investing, like most of you watching this webinar, either live or at home on the recorded version, are more of a educated investor than most. So you understand that what we're trying to do is determine what's going to cause these stocks valuations to increase going forward, not what's been going up recently, like a lot of people look at. So that's one question. Now, if you're talking valuation, Jeffrey, are they looking at sectors that are trading at lower valuations? In other words, can you get transports at 9 times earnings versus consumer staples for 15 times earnings, that kind of thing. If that's what you're looking for, what I would do is just use the ETFs, okay? This one is really a bottoms-up screener versus a top-down screener. What you'd want to do is just find the ETFs for the major sectors and then kind of judge from that. And once you're in there, then obviously you can come through here and select different industries, different sectors of the market to scan for stocks in that area. For anyone not familiar, a lot of you probably are, there's basically two ways to find stocks and pick investments, okay? One is what's known as a top-down analysis, and that's what like a big mutual funds, these broad-based, well-diversified, that hold 10,000 stocks, that's what they're doing. So top-down means you start at the top, okay? So they look at the U.S. equity market, the European equity market, the Asian, the bond market, and say, okay, which giant market do we expect to do better? Is it Europe? Is it the U.S., et cetera? Let's say they pick the U.S. Now they got U.S. equity. So now that they're in there, they're going down a step, and they say, okay, what sector do we expect to perform the best? Is tech likely to advance more? What's the valuation on transport stocks or consumer discretionary stocks or anything in that area? Once they find that sector, then they go down another step and say, okay, we know we want American stocks, we want tech stocks. Which companies within that sector are we looking for, or do we want to put into our portfolio? So from there, then they're looking for the stocks that maybe are growing at a fast rate and have the lower valuations and are the industry leaders. That's a top-down analysis. A bottoms-up analysis is really the fundamentals of value investing. Okay, if you talk to Walter Schloss, you talk to Peter Lynch, you talk to Warren Buffett, Lynch may be a bad example, he's half growth, but if you go to Buffett, these real deep value guys, they don't care what Goldman Sachs thinks the European market's going to do. They don't care where we are in a market cycle. They don't care, whether tech's hot right now or whether solar stocks are moving. They're going bottoms up, so they're looking for the absolute fundamentals of the company. I want a stock that's, growing at 10%. It's trading at, less than 15 times earnings. It's got margins of at least 10%. And whatever stocks populate, that's the ones they're interested in. Whether it's a U.S. tech stock, whether it's a European telecommunications company, they don't really care. So when you hear the terms top-down analysis or bottoms-up analysis, that's what it refers to. Now, I would argue that this screener is far more of a bottoms-up analysis tool because that's where most value investors fall into, and that's what the majority of us are trying to do. Now, Kevin asked about technical indicators. So can you look at Doji Star setups, 12%, okay, EMAs, exponential move, yeah, that kind of thing. Kevin, the quick answer is no. There's not a lot of technical indicators on here, basically because we just don't use it a lot. There are other scanners out there. If you're looking for a free scanner on technical indicators, I would recommend you go to like a finviz.com. Now, you'll see other scanners. The biggest difference between the GuruFocus all-in-one screener and the other scanners available to you is that it is mining fundamental data. Okay, this is what actually moves stocks when we're talking about large money movements, right? If you go to, let's say, finviz.com, and I'll just give you this if you happen to be a technician and want to use that, this is really where you're going to go to look for technical data if that's kind of your thing. So you see in here, it's got a, I mean, this is their fundamental, let me show you, this is their fundamental data tab. That's everything they have. Got some little pop-up trying to get me to open an account here. This is one of the biggest scanners out. This is all the fundamental data they have. Now, the screener we've been showing you has about 50 to 100 times these many options. This is just some very basic stuff that we have more than that in one tab. But on the technical side, they do have some technical indicators you can look through. So if you want to look at RSIs, you want to look at moving averages, that kind of thing. Again, it's not really a value-based approach, but that's why we don't have it on our site, but it is out there if that's something you're looking for. But I would say that's the biggest separator from most of the ones out there that you can buy, and these, you go to these investment seminars and it says, oh, red light, red light sell, green light buy. It's all just technical stuff. So Jeffrey says, I think stocks are more like fashions of ladies' garments and how to get what is hot. So yeah, I mean, if you're a momentum-based trader, so to speak, I guess that's what you'd call it. You're looking for the big movers. I mean, you can find that here, right? If we go to the price tab, for instance, that's going to be right up here. If we go to price, I mean, what you're looking for, stocks that are moving. So you're going to look for price changes. So if you want to see 6 months, stocks that are up at least 20% of the last 6 months, you can search that price movement. That's just a basic price movement. You can search it relative to the S&P. So we want stocks that are over the last 6 months outperforming the S&P by at least 10%, or the last 12 months, or the last week or month. You can do that. You can find stocks that have moved up, let's say at least 20% today. We can find stocks that have a high or low percentage of the shares held short. What's the short float? What percentage of these shares is everyone else shorting and betting against? So we can look for them that have at least 10% of the shares short. Now it's not going to find any because we have all these positive metrics put into it. Find high short ratio. Let's see. Let's look at the top 20 shorted stocks. So there's a lot of options if that's kind of what you're looking for. I hope that answers your question, Jeffrey. Now, Rudy asks, how do you avoid value traps using the screener? It's a great question. One of the actual articles here, let me go back to the main screener page. It covers just that. If you look at this bottom article, Rudy, and this is to answer your question, the bottom article here is screening for possible value traps. Again, that's something you're going to kind of have to learn on your own, but this will kind of get into that and show you some research on those value traps. And the examples it gives here are RIM, BlackBerry, Nokia, Radio Shack, all stocks that have gone close to zero, some to zero, but yet look good on value screeners. And it kind of goes through what you want to look for as far as be sure they don't have declining margins. Be sure they don't have a few other things. So that's a nice article. Value traps, if you're new to this, what that means for investors is stocks that look like great values, and as value investors, we want to jump on them because they're trading at, say, 10 times earnings or 8 times earnings while the market is trading at 18 or 20. but in reality they're going to keep sinking. So, examples that BlackBerry is probably the best example. This one's $160 stock, now it's $8. And at one point you look at it and it's going, hey, this thing's trading at 7 times earnings. What a great deal. But when you dug further, you saw, well, revenues are declining, profits are declining, their margins are going down. So you want to be kind of aware of all that. It's just kind of something that's going to come with, as you read more, as you study more, as you begin to understand these businesses better, you'll kind of get a feel for that. Sean, can you talk more about bottoms-up investing metrics? Yeah, Sean, I mean, again, bottoms-up is just basically if you're using this screener, you're doing a bottoms-up analysis. Okay, so bottoms-up analysis just means that you didn't go say, well, I want, U.S. stocks, I want the tech sector, and I want the top 5 growers. That's top down. Bottom up just means that you're looking for fundamental data regardless of what sector the stock in or what is quote unquote hot right now. Maybe asks, is price real time? Yes, price is as of the previous day's close. What? I'm sorry, 30 minutes. I've been corrected. Price is up to date as of the last 30 minutes for U.S. stocks. Yeah, okay, I'm sorry, that was my correction. So for global stocks, in other words, if you're looking at European, Canadian stocks, those prices are as of the previous day's close. U.S. stocks are within 30 minutes of their exact price. So good questions. So Dr. Adam asked, in FinViz you mentioned, is it possible the portfolio management tool allows you to track things only in U.S. dollars? In GuruFocus, is it possible to track your securities in, say, U.S. and Canada and keep records in local currency? I asked because I prefer not to commingle currencies. Adam, absolutely, good question. If you do that, and we've done other webinars, if you go on YouTube and look about the user portfolios, the custom My Portfolio section up here, if you add stock, let's say you add a few U.S. stocks, you add some Canadian stocks, you add some European stock traded in the British pound, it will keep them all in their current currency. And I understand the reason you want to do that is because you don't want currency fluctuations to affect the performance of your portfolio. And it looks like, hey, I've done really well in Europe, but what's actually happened is, the euro has increased. So it does not commingle the currencies. It will keep them separate. Good question. David, do Guru and Insider buy and sell data always run about 1 quarter behind? So the way that works, David, we update this site. It's done by an algorithm. It's done electronically. It's been programmed as soon as the filings, which are known as a 13F, are made public data. And 13F is what everyone from Buffett to the guys at Citigroup have to file once a quarter, containing their updated portfolio and any buy-sell information. So the second, well, I won't say the second, within 20 minutes of that data becoming public, it's on this site. So the reason it's generally a quarter behind is, they'll file, what do they have, 14 days? 45 days from the end of the quarter to file. So for instance, for the data ending the March 31 quarter, it was available for each fund no later than April the 15th, right? So until July 15th, we're going to be looking at the same data. Now, the only difference is if they are a 5% or greater holder in that stock, so if they own a large chunk, and we're talking David Teppers, we're talking Buffett's, we're talking the big guys here swinging real weight, Ackman and the others, if they own 5% or more of that company, they have 14 days to report it. They don't wait to the end of the quarter. It must be updated real time within 14 days. So that data, again, is direct to this website as soon as it becomes available. So you may there may be information that changes mid-quarter if they do buy and sells in companies they own large chunks of. David, the Guru picks we send out daily in the emails, how current are they? Those are just as current. Those are the ones that have just come. Those are generally ones that just popped up and came in. So yeah, as soon as new data is generated, it's usually spit out to you guys. Now, Pablo asked, once a screener is run, is there a way to then sort the results by a different parameter? Let's say sort debt to equity ratio, et cetera. Absolutely, Pablo, there is. I covered this very briefly, but we'll do it again. let's look at, for instance, dividend growth stocks. We got 34 companies, and let's say you want to sort it by, you said debt to equity ratio. Okay, so what we're going to do is look at the tabs here on the results, above the results. There's fundamental, valuation, profitability, etc. This is different ways to view that data, which data for those stocks you want to see. So if we're talking about debt to equity ratio, that's going to be probably a valuation metric. See if it's in fundamental. Sometimes they're listed here. If not, you can do a customized. I just want to check. Okay, so we'll just go to customized. This will make it really personal for you. And when you click on customize view over here, if you're seeing this, Pablo, right at the top of the list of stocks, you can choose what you want to see. Okay, so if you've got, here's debt to equity ratio, you just check that box, click save view. Let me scroll down so you can see this. Click save view, and you'll notice right up here at the top, now debt to equity is one of them. Okay, now a couple things you can do from there. You can drag this. I'm sorry, you can't. I'm sorry, not drag. Click this to filter it either in ascending or descending order. So a lot of guys, look, if you're out there and you're like, I look at earnings, I look at PE, I look at, profit margin, I want to see the range of their PE, their price to book, and I want to know their growth rate, you can just create a customized view and save it. So if you go to customized view and you want to look at this, not that, you want to look at this, you want to look at that, take this off, etc., you can just save that view and it will be there each time you come to the screener results page, okay? So Jeffrey asks, how often do you change gurus and add new ones or remove old ones? Well, what we do, we don't really do that much anymore. We've got a lot of gurus. What Charlie has done recently is added a new feature to the website. And let me see if I can even find this thing. What is it called, Charlie? Okay, it's called Premium Plus, and here it is in the top left. And what it does is put not only the usual gurus, but every single fund or fund manager that files a 13F. So if they manage $100 million or more, they are listed. And you see how extensive this list is. This is just the A's. Now, if you click on if you see a little plus sign there, that means it's part of the Premium Plus package. Now look, we're not trying to cut out, oh, you don't get to see Buffett unless you pay more. No. All the big guys you want to follow are on this site. They are all there. All the big ones you've heard of are part of the GuruFocus membership. But what happened is, we've got a lot of institutional investors that, oh, can you add this guy? Can you add this guy? Sometimes it's an old friend of his from Yale that's managing a fund at Citi and he's at Merrill. Sometimes it's, someone he read an article about. Usually there's smaller portfolio or managers that we've never heard of, but over time we got kind of tired of adding. So we thought, for the big institutional guys that want to look at every single fund manager out there that manages money, you can do the Premium Plus. But I hope that answered your question, Jeffrey. We don't usually change out gurus or add new ones very often. I think the majority of that's been done. Now, having said that, there's a new big value guy that comes out. He's managing good money, puts up a good track record. We'll add him to the list, but it doesn't happen that often because the ones we've chosen to show on this website are guys that have proven track records. They're dedicated value investors. They're well respected in the industry, and those are really the only people we want to put in front of you, since you're getting so much of your investment information from this site. So we're at about 55 minutes. I like to keep these under an hour just to be convenient for you guys. Are there any other questions before we conclude the webinar? And let me know if I need to recover something or something didn't make sense. Again, the goal of these webinars is not to sell you. It's not to push anything. We want you to get full access to this website, and we want you to be able to put all these tools to use and understand all the benefits you have available to you, as many of our members we're finding out don't even realize everything they can do here. Well, thank you, David. Thank you, Adam. I appreciate that. Maber, could you cut and paste personal, it says list devs. I guess you mean lists.
There.
You can list, okay, what you can do, if you're talking about filtering through your own list of stocks, you can do it. For instance, you can just separate them each with a comma and a space. So we'll look at Amazon, Google, can't type today, Apple, General Motors, Ford, Procter and Gamble, etc., and just hit go. And that puts them in this list, and then you can then filter by whatever you want to look for. So you can take that and say, all right, well, of all the stocks I put in, how many are trading at less than 17 times earnings, and 2 of them are. Now, this is one of those areas you got to do some research. Amazon made the list because it doesn't have a PE ratio, because their last trailing 12 months it didn't show a profit. So keep that in mind. So Jeffrey, okay, Jeffrey, this is a question I got to charge you for. Says, how do we apply once we get the list of stocks? So Jeffrey, a couple of options, right? It's really going to be up to you. It's how, I don't know if you're managing your own portfolio, if you've got a portion of your net worth you want to allocate to picking stocks and trying it out. If you're trying to build yourself a comprehensive portfolio, I mean, it's kind of a longer topic for another day, but something like that, what I would recommend you do is, especially, again, I don't know how much experience you have. I don't know how long you've been investing. But if you're newer to it, I would start with, if you're looking to create a stock, one of these pre-done screeners. I mean, these are screeners that have outperformed the market for the last 5, 6, 7 years. They generally have, 20 to 50 stocks in them. We update them each and every year. I would use something like this if you're building your own portfolio, and maybe take a portion of that and use some of the stocks you found. But how you use that data is really up to you, as we're not financial advisors as far as putting your capital to work and allocating those resources. And yes, to answer your question, you can recap this webinar at your own pace. It's available on YouTube. You'll get a follow-up email from us, or it may say from GoToWebinar. Check that, because in the details that we give you the link to review this as well. So anyway, I'll go ahead and cap off the webinar. Thank you all for attending live, and those of you who watched at home, thank you for sitting through the webinar and staying with us as we answered live questions. We hope this helps and gives you a better understanding of the GuruFocus all-in-one screener. Again, this is available only to premium to GuruFocus members. I encourage you to try out the membership. It is a risk-free trial, and it is well worth the money, in my opinion, especially if you are managing your own portfolio, that of others, or selecting stocks with your personal account. So thank you all for coming. We'll see you on the next webinar.